Okay, so what's interesting about indexing? Okay, so we're talking about indexing. Indexing, you need a high liquid market for it to work very, very well, i.e. S&P 500. Passively indexing into the S&P 500 is easy because you have lots of shares trading all the time. It's very liquid. So you can do that. When we start talking about corporate bonds or muni bonds or any kind of bonds except treasuries, treasury market's fairly liquid. You can actually index into the treasury market. But what happens is we're still an old school business. We're still talking to brokers on the phone. People still make inventories of bonds. And so you have essentially lack of liquidity. And so if I try to passively index something that has low liquidity, you have a problem with what they call your creation and redemption units in an ETF. And so essentially, that's why an active manager in that field will always outperform the passive. Because what happens in those bond funds, especially the corporate ones, is a passive bond fund will end up buying bonds of the largest issuers on Wall Street.